talked about how everything was going on over here. We had this breakout. I want to take it all the way back because I was waiting on this one. So we had this breakout. Now, range rules are range rules, and that is the case as long as human beings trade marketplaces. So what that means is now that we're outside of this channel, I'm looking for it to now come down from up here over here, right? It's just this big continuum. That's all it's doing. So I need to find a good place and a smart place to do that. And the next bar we get is this bar. Matching top, doesn't break above. Kind of bearish, a little. Not much going on with that. Ooh, big red. Don't want to go short yet though, because my signal bar, which is this bar, this is the trigger, this is the signal. It's not a great signal. A trigger is just whenever a bar breaks the previous low or the previous high. This trigger bar to that, triggered that, you know. So even though it's strong, my signal bar isn't that good. It's a new high. You know, this is so aggressive. Like, if you're advanced, like, you can take that and you just know what the risk is of taking that. But, you know, huge reward. So, I'm not in the position, right? I'm kind of still in the red from this first trade, even though I won the second trade. I'm in the red, so I'm not too aggressive on anything. So I'm just going to wait until I get a nice signal bar lower high or a failed second entry pattern. So I wait. And then here I get the lower high. But once again, this big red bar triggered this medium middle green bar. So that signal's not that great. You can't look at this and be like, oh yeah, it's going to be red next. Like, probably, right? You'd look at that and be like, oh, dude, yeah, it's going to be red. But, so you just have to kind of wait. Once again, if you're aggressive, I was thinking about like if I didn't have any trades on for the day, I might have done this one. I would have let it break and then put a limit order at 29.71, 725. And you see on the next bar it goes through it. So you would have gotten in and you almost got out. Yeah, then you got out by there. So you would have got plenty, but it's hard to take that trade. You get this green one next. It's kind of like a matching reversal bar. The things that I start to look for now, though, are this bar is the same height as that one, so congestion on the way, which congestion is just small range. These are, a range is several points of sideways movement. Congestion is just a few points of sideways movement. Boom, technical congestion. That's the definition of congestion. You know, two bars inside the first bar. So I immediately treat this like a range where I want to enter up here to go down here. That's how I should be treating it. So when it breaks out, I'm ecstatic. That's exactly what I want. Gives me more space to get that trade off before we get down there. And then we get this bar. This is interesting. Really nice signal after all this moves. Sometimes you would expect this to shoot off. It's the failed second entry long off this high. Tried to go higher once. It never got higher, but it finally got higher here. And now it's finally about to go lower. So that's in our strategy. That's what you want. At the highs of the overall range. So we only need a scalp, but on the next stage of swing trading, you might hold a couple contracts all the way till down here. See if it comes all the way down. A lot of things going on with entering this trade. So hell yeah, we took it. Okay. There's already an issue with the way I entered this trade. Okay. My friend Josh just sent me the funniest text I've ever seen. Oh my god, man. Summoning no jutsu, for real. So, the problem with the way I entered this trade is there's not enough room for me to exit before I get to this low. Right? I entered on 29.69.75 and the low is 29.69.25. I needed 2 more ticks, technically 3, but 2 more ticks to exit from where I entered, which is this pink line. Whenever I sell, I have a pink little arrow, and then to exit I have to buy, so it's blue. And if I start off buying, like over here, then the first arrow will be blue, and the sell order is how I exited. So to properly enter this trade, I needed to enter at least 1 tick back. One tick back of this red bar. That's where I needed to enter. So I could at least be getting out as it touched there. But I was going for a swing. Like I was going for probably 2 points, 2.5 points, maybe to test kind of this area. So I had my take profit moved from where it normally would sit regardless. That's a technical error. Need to work on that. But I'm working on that. Okay, so this next one, start getting freaking nervous, right? Because it's matching highs, so you're not freaked out. I mean, and honestly, you shouldn't be getting nervous, right? Let's just cut that in the butt. But you know what I mean. It's like not looking too hot. You might have to take the L on this one. But you have to wait this out. You know, if your stop is up here, just gotta leave it there and let it do its job. You know, it's when you don't let it do its job that you know, fuck yourself. So I made another mistake here. I'm just trying to be transparent because I think that's how I'm going to grow the best, honestly. My stop was actually at this high. My 2 points, see, and that's another, that was another entry error. And the reason why I entered like that is because I really felt this would take off. I'd get another leg kind of like this leg, I literally, I didn't do this, but I could do it now. I would just measure this leg and then bang, I think it's coming somewhere over here, which, like I said, is pretty close to that breakout area. So when it does this, feeling good, that's what we want. It broke higher. And notice that my stop was here. Even though I took it off, I mean, that's really a bad thing. I call it riding naked. Like, this thing creeps up above and now you don't know where to exit. I think my exit would have been the highs, but I take a decent loss if I do it like that. And, um, it would have been better just to take the loss there. So that's how you have to look at it. Um, anyway, I like that. That looks good. I'm not going to add on, but that's what we want to see. People are getting trapped long, big red bars down. Um, they're all setting up right in the middle of the range, though, right? None of them are setting up like up here, so you really get a nice clear trajectory down. But some pressure, and then boom, you get this reversal bar. So you're just like, okay, this is a real range. This is a real range, and I didn't put it there, but you can always put it there if you want. There's like there's a little midline in there. Just take the equidistant, eyeball it. So you see how in the middle it's just getting real caught up in this upper middle section. Um, then we get the doji. If you can't see it, learn to see it. um, so we're just waiting. We're waiting. Still, if prices come above this 71, 75 area, then we're out, and we're out for $100 or 2 points. So on the day, it's really not that big of a loss, depending on how you're looking at it. Um, but it sucks, and you don't want to do that. You entered this trade to make it back, not to lose more. So um, that's part of that psychology going on when you take off this trade. Or when you take off the stop loss, you're giving yourself a excuse to, um, you know, average down or let it pull back. Because, sometimes, like, this is where the frequency trading thing becomes a thing, is where um, a frequency trade program will just fucking overbuy it, and then sell it. And then so it just busts through and then comes back, and then sets up what you were trying to do in the first place. It's part of the game. You just have to learn to think in probabilities and less on this particular trade, should I win or lose. So now, look at this. It broke higher again and then made another huge red bar. Honestly, I'm getting sketched out, right? This thing needs to go ahead and go if it's going to go, because it's made that double bottom. Remember what we talked about over here with this double bottom short and trying to hold it past these lows that it's creating. See these lows it's made now? That gets sketchy. So I'm looking at this and I'm like, man, I wouldn't move my take profit to here, because for me to even exit this means it broke below. So that's not the most effective place. Maybe you just bring it to the lows and see if you can get it out there. But I'm expecting this thing to come down here. So I'm definitely kind of confused as to why it's doing that. I don't need to know why. I just need to have my stop where it's supposed to be. So if it goes against me, then I'm ready for it. Okay. But lo and behold, it finally does move on down, and you now I'm just waiting. I'm just waiting to see how far it'll go. And I had my um, take profit at, yeah, 29.6750. That's not good trade management. Um, it's just like a random spot on the chart I picked because it would um, help me get out of the red and then give me a few coins for the day. So it was a pretty like a wallet decision putting my take profit there. Um, okay, better place to have put it would have been one tick before the end of that. So right here, like 29.68. Yeah, that you know, even though the difference is 3 ticks, and it probably would, um, this has a methodology behind it. This has, and it's a methodology that has nothing to do with a dollar amount, right? It's just pure working the geometry of the market. So, you know, making this decision ultimately makes you more money, even though it looks like less than that. And I'm going to explain how, had I have just put it there, um, I might have actually profited more than I ended up profiting on this trade because of all these things going on. So now we have that double bottom going on with the doji. It's moving lower, so we're not super pressed on anything. But I've been up, I've been in since up here, so um, I'm seeing I'm seeing that we broke out of the range, this little congestion, and we could come touch up here again. And if we come touch up here, I'm not protected, remember? I'm riding naked to the highs. So I want to start to control that risk. The smartest thing I should have done was just put my take profit right there and leave it alone and said, hey, that's what it is. And the second best thing I could have done is take the stop loss. I guess, you know, you'd put it at break even plus one. You put it at break even plus one. No reason to lose commission. If you know, this is basically admitting defeat, right? You know, you need to take your scalp right now, or hold this thing, you know, like I said, for here, or admit your defeat and suffer casualties, right? So I decided to just admit defeat and let that be a scratch trade where I make one tick, and it doesn't break above on this bar, but when it breaks above, I exited for one tick right there because, like I said, it could do this. Now, I don't see this bar at the end, right? When I'm trading, I see this, and then I see a bar open and a bar that moves higher and then goes down a little bit, then goes up a little bit, then like goes closes down there finally, right? So, you know, you're seeing it and it's like, oh, that might go lower. But when it breaks above and now you are back in the red, you're back in the red, right? And it's only for a few ticks. I mean, that's what I mean by the best thing is leave your stop where it goes and let the rest work itself out. But I'm learning how to manage trades better, and so I exited. So I actually ended up on a loss for the day. It's a pretty small loss, not meaningful at all. But what does the market do exactly after I get out for one tick because I got scared? Oh, what? Word? Is that how you gonna do me? So, um, you know, I would have definitely gotten that trade, even the stupid emotional one. But this is the important part of trading is that I'm teaching myself how to follow my rules. And today, yeah, I missed the move that would have worked. But tomorrow, I will miss the trade that goes against me and then, you know, fucks up more. So, uh, man, I love these lessons because I don't usually take too many losers. So, learning how to deal with them and learning how to understand that it's just a loss, it's whatever. Um, that's just that quality practice that I'm trying to get at this point in my trading career. So, putting it all together, that is the story of my trading day to day. But yeah, I'm gonna be back at it tomorrow. Or might even take a few more today. I'll see what's going on. But yeah, there we go.